What's going on, everyone? Charlie here. We're going to talk about interval funds today. This is a very important filing that came out of the NSCC, which stands for the National Securities Clearing Corporation. They have cleared, or they're one of the major clearing agencies involved in the financial system. Their affiliates are going to be their parent company, DTCC, which is the Depository Trust Clearing Corporation. Then we have the Depository Trust Company, which also does clearing, settlement, and safekeeping of securities. And then we have the FICC, which deals with fixed income. Now we're going to be reading a filing again. This is NSCC 2022-002. We're going to be looking into the underlying legal documents, as this is an area that no one likes to look at, but you can learn a lot of information here. And this is where I have personally found my edge in the market, and it has worked very well for me. So again, filings is where the reality happens. So let's go ahead and take a look at NSCC 2022-002 relating to interval funds. Before I go any further, let me turn off the Discord pings so that doesn't annoy everyone. Sorry about that. Okay, back to the filing. So we have, again, NSCC 2022-002. Whenever you see a filing like this, you're going to see this little stamp here at the top that says this document is scheduled to be published in the Federal Register on 4/7/2022. Now, because the header reads filed and immediate effectiveness, we can expect that when this is published, unless there's anything saying otherwise in this filing, that once this is published as scheduled on the 7th, which is tomorrow, this will become effective. So again, this is to make certain changes to Rule 52 to support processing of interval fund repurchase orders, remove underwriting tender offer provisions, and make certain other clarifications. So actually, you know what? Let me turn on my cool little transitions here just so it looks a little better. Okay, so the proposed rule change consists of modifications to Rule 52 of the rules to do we're going to do three primary things here. Number one, we're making certain changes to support processing of interval fund repurchase orders. Number two, again, we're removing the underwriting tender offer provisions, which are no longer in use. And number three, we are renumbering Rule 52 and making certain other clarifications. The proposed changes are described in this video. Let's go ahead and get started. So the interval fund repurchase orders purpose, NSCC is proposing to enhance Rule 52 to support processing of future dated interval fund repurchase orders by allowing NSCC members to submit orders prior to the day the order is intended to take place, otherwise known as the trade date. Now again, repurchase orders, what those are, it's an exchange of cash and collateral for an exchange back at a future date with interest. Now, interval funds are closed-ended funds that periodically offer to repurchase shares from their shareholders in compliance with Rule 23C-3 under the Investment Company Act of 1940. Now, interval funds make periodic offers to buy back shares from shareholders as disclosed in the fund's prospectus and annual shareholder reports. Each offer will specify the repurchase period, otherwise known as the start and end dates, during which the fund will accept shareholder repurchase requests to sell their shares back to the fund. The repurchase occurs on the last day of the repurchase period or a later specified trade date. Now, NSCC members can submit interval fund repurchase orders on behalf of shareholders to the fund members using FundServe. Now, FundServe is an NSCC service described in Rule 52 that provides for processing and settling of FundServe eligible funds, which includes certain mutual fund, bank collective fund, and other pooled investment product transactions between fund companies, including interval funds and their distributors. Currently, FundServe does not allow NSCC members to submit interval fund repurchase orders prior to the trade date. FundServe currently allows NSCC members to submit repurchase orders for interval funds that are FundServe eligible by submitting a repurchase order on the trade date, or to the extent established by each fund member, any day thereafter, which is referred to as of orders. So as of right now, these funds cannot make their purchases prior to the trade date. Now, super note 9 here, anytime you see a little number in anything, It's going to be referencing you to another part of the filing, usually lower in that same page. This is going to describe FundServ eligible funds in more detail. FundServ eligible funds is defined as a fund or other pooled investment entity, including in the list for which provision is made in Section 1C of Rule 3, which is titled Definition of FundServ Eligible Fund, Rule 1. That didn't really help anything. But anyways, currently FundServ does not allow NSCC members to submit interval fund repurchase orders prior to the trade date. FundServ currently allows NSCC members to submit repurchase orders for interval funds that are FundServ eligible, again, by the trade date, not on it. So that's the biggest problem, right? So in 2018, this is what led to this. The Broker-Dealer Advisory Committee of the Investment Company Institute formed an Interval Funds Task Force, otherwise known as the IFTF, to explore opportunities to improve internal fund operational efficiencies and reduce operating risk. The IFTF memorialized the operational challenges of interval funds in a series of white papers, which I will link below in this video. Very interesting reads. One of the challenges that the IFTF identified with respect to interval funds was the inability of funds to submit repurchase orders prior to the trade date through FundServ. So, if we take a quick recap and we look at everything we've seen in the filing so far, what do we know? NSCC is proposing the interval funds with repurchase offers. The purpose is to remedy one of the many challenges, or the biggest challenge, that the Broker-Dealer Advisory Committee of the Investment Company Institute, which formed the Interval Funds Task Force, identified with respect to these funds. So if you had to guess, if the biggest problem is not being able to make purchases before the trade date, that's right. NSCC is proposing to allow NSCC members to submit orders prior to the trade date to support submission of interval fund repurchase orders. Such orders would be submitted prior to the trade date, but dated as of the trade date. That's not criminal. So, NSCC is also proposing to amend the rules to provide for an acknowledgement process by NSCC members relating to interval fund repurchase orders. Currently, the rules provide that NSCC members may only confirm or reject orders, or accept, confirm, or reject corrections of orders. In order to provide NSCC members confidence that the repurchase orders have been received, NSCC is proposing to allow NSCC members that receive interval fund repurchase orders to acknowledge orders and corrections relating to interval fund repurchase orders, in addition to confirming and rejecting such orders or corrections. So the difference between the previous or the current way that it's being done and the proposed way is the simple acknowledgement of these orders, in addition to the confirming, rejecting, and so on and so forth. So, to accommodate repurchase orders that are submitted prior to the trade date, the acknowledgement process will provide that if an interval fund repurchase order with a future trade date is acknowledged prior to the confirmation deadline, the confirmation deadline will be extended to 10 business days after the trade date. So put this into perspective. They can now do this prior to the trade date, and all they have to do is acknowledge that it's there, and they can get a 10-day extension that starts after the trade date. So gaming something here. And again, they slip in at the end here, provided the order was not previously confirmed or rejected. So that's the first section. Number one, to make certain changes to support these funds, the interval funds. This is the first thing that we're going to do. Now, let's look at the second thing. Removal of underwriting tender offer provisions. Basically, this one's pretty simple. We're already done with the bulk of this filing. In 1990, basically, NSCC added provisions to FundServ intended to support the processing of orders relating to mutual fund underwritings and tender offers. The provisions were intended to provide for automated processing of certain processes that were specific to underwritings and tender offers. Basically, they're getting rid of that because it's no longer in use and it's has less functionality. So, obviously, since no one's using it, they're going to be removing it. And since they're going to be removing it, obviously, due to the inactivity, they must clarify the rule books to account for these changes, which is what the third thing is in this filing, clarifications. Again, since NSCC is removing the service, they will reflect the rule books to update the rules in regards to this filing and the changes that they also made to reflect the interval fund repurchase order changes. Now again, this is the in essence part. It's already all here. The interval funds, again, these three things, we just went over all this. If you want to pause for a recap, go right ahead. But basically, they're allowing them to make their transactions prior to the trade date, at which point if those transactions are acknowledged but not confirmed or rejected, they will be extended for 10 business days after the trade date. They're also removing the tender underwriter provisions because it's no longer in use. So NSCC is removing it due to inactivity. And then lastly, there is a rule book to all this stuff. So naturally, they're going to have to update that stuff to reflect the new rules in the underlying writing. There you have it. And as always, if you're a trader and you're interested in making money, we're doing very well. We have a few open spots left. We are keeping it limited so that we can focus on education and growing member success rates. But as for right now, if you like more information, you can check out fudstoptrading.com. FUD stands for fear, uncertainty, and doubt. The reason why there is so much of this in existence in social media is due to the fact that no one reads underlying documents. They all try to chase somebody on social media as a hero, and that is not the proper way to invest. If you want to invest, you got to learn the facts, and the facts are in the underlying documents. I will read the link the white papers below. Thanks for watching. Hope you learned something, and as always, rise above the narrative.